And we're off and away. All right, so this is just our second lesson. And we've got more people on than we did for the first lesson, so we're getting there. There wasn't any real learning involved in the first lesson, though. We just sort of covered roughly what was going on. Hopefully you've watched that video already and you know what's going on, but if not, do so. All I really was asking people to do was to get themselves a TradingView account, which is a free account, and also be able to log into at least a demo trading account on an MT4 platform. And we went through a few details on how to do that in the first lesson. But if anyone's still having trouble, they're sing out, and we'll go through it at another time. But tonight we're going to start the actual technical analysis side of learning to trade. And Aaron's just on here so that he can put some good trading knowledge to his code, put his coding knowledge to some good trading strategy that he hopefully going to learn here. Isn't that right, Aaron?
Yeah, hopefully.
Hopefully. All right, so we sort of touched on what we were going to cover in that first lesson, and we sort of touched on support, but we also mentioned how my definition of support is going to be probably totally different to what you've sort of learnt before. But what we're going to go through tonight, we are going to talk about what most people would call support, because knowing that's still important. But we're going to use that as a bit of knowledge to work out what I call market structure. And knowing market structure is simply telling us which way the market's going, whether it's going up or down or just consolidating or what it's up to. So probably, the number one most important thing to learn, because if you're going to trade, you're either going to do a buy or a sell, so the market needs to either go up or down for you. So knowing which way it's going is pretty important. There are some more important stuff as well, though, that we'll get into. All right, so like I said in the first lesson, Janet was asking about time frames and which time frames best to trade. And that's probably a really common question that people ask, but it's not just one time frame that I would, some people might say they're just scalpers and they just trade the 1 minute time frame, or they might be swing traders and just look at the daily. But even if that's what they're doing, if they're any good, I would say that they're also looking at the other time frames so that they've got more of an overall idea of what's going on. So for me, and also, like I said in the first lesson, there are so many different strategies out there. And I wouldn't, some of them are probably crap, but I mean, the majority of them probably work, at least to a decent extent, if you understand them and you execute them properly with the right mindset and risk to reward and all of those sort of things. And I'm going to at least start and try and just stick to generalities so that it's something that applies to most different trading strategies. But at some stage, as we start to refine a strategy and things that I find important, it's going to come down to my opinion and my strategies and the way I do things, at least to some extent, simply because if I'm going to be talking about trading, I'm going to have to talk about what I know best, and that'll be the way I do things, I guess. All right, so talking about timeframes, a reasonably good idea and a way to start is to start on a high time frame, and we're on the daily time frame. So you can select your time frame there, scroll down. You can go huge different time frames if you want, but I don't extremely rarely ever find going above 1 day really useful. Personally, and here we go talking personally already, I don't go above 4 hour a lot, except if I can't see, if what I'm looking for isn't visible easily on 4 hour, might have to go to the daily to see what's going on. And what I mean by that, one thing that you'll hear in trading a lot is that before you trade, you need to look left to see what the market's done previously in order to have a bit of an idea of what it's doing now. So, at the moment, the market's going up. That doesn't mean we're going to place a buy order, because if we look to the left, we'll see that even though right at the moment the candles are green, if we look to the left just a little bit, their overall trend from here has been down. So, and that's why if you hear people say look to the left, that's simply what that means. So what I'm going to do tonight, just as a start, is, and this is what people would call support, is really where the market, sorry, that will be resistance, and down here will be support, but where the market stops going up and starts coming down, that is resistance. Like, as I said, resistance is above where the market is now. And I've got to keep it really simple, because things that some of us take for granted, other people won't know. But so this very last candle, and I did mention what candles were in that first lesson. That's the red and green lines. The furthest right, that's the current one. And so we can see that green number just there, that's the current value of the euro against the US dollar. So resistance is always going to be above where the market is now, and support will always be below. So I'm going to draw in where resistance is and where support is. Now, the market's also bounced here, and this is higher than this. But what I'm going to do, particularly because this is a higher time frame, is I'm just going to be most interested in the most recent high point and the most recent low point, or if you want to call it the most recent resistance and most recent support. Now, we will have a lesson on TradingView, and I might even get Des to help me, because he does use it a lot more than me. And the reason we're using TradingView and not just the MT4 platform is there's a lot more drawing and technical analysis tools that we can use, and they're easier to use on TradingView. But we've got this little box here. This is how I draw a shaded box. And we won't worry about being too accurate right now, but and all I've done here is I've drawn the box from the top of the candles, of the main body of the candle, and I've drawn it right up to the top of the wick. If you don't know what a body is and a wick is, you've got to watch lesson 1. We didn't do much on candles, but we did mention that. So I won't go into what I said there again. But so I'm doing that because, that's where the market turned around. And support and resistance, in the general way we're describing it now, is never just a thin individual line. So if the market was getting into this shaded box anywhere, then we're getting into the zone where it's likely to turn around, and then we might look for other things to indicate whether it actually was turning or not. And we'll mention this a lot as we go through the course, but just because we've got what we've defined as resistance here, that doesn't mean that the market's going to come to here and definitely bounce and come back down. But there is a chance, there is a reasonable chance that somewhere here the market may turn around. But we're going to wait for a little bit of extra confirmation before we actually trade on that. We've had them. And we'll get into trade plans and things like that as well. But this is the only problem with having the free version of TradingView, which is all I've got at the moment. You need more than one thing telling you that the market's going to go one way or the other before you want to actually place a trade. So at the moment, we've got resistance here, and a very general type of resistance as well. So we would need a lot more than that in order to place a trade. But we're going to do the same down here at the most recent low point. And I'm not calling this a recent low point, even though it's sort of low, high, going down like that. I want the main overall low point for the daily time frame. So we'll draw ourselves another little box down here. And we'll do the same. We'll go from the body to the end of the wicks there. Something like that. So now we've got a little bit of a zone on the daily where the market's, it bounced here and it bounced there, and now it's just in the middle. On its own, that's not telling us anything too exciting. But then I like to just sort of work my way down some of the main time frames, not all of them, but some of the main ones. So we'll go down to the 4-hour time frame. And we'll just, with TradingView, if you just double click, you can sort of drag the chart around wherever you want it. And over here on the scale, if you just double click and drag it up, you can expand it out that way. So you can get a bit better of a look. Now, what I'm looking at here is obviously the market's just been going down the whole way. And if we come back to the daily, what we're looking when we go to the 4-hour time frame is basically just from about here down to here. That's the section we're looking at. It's just expanded out over the whole chart. And you can actually do too much technical analysis, in my opinion. You can really draw too many lines and have too much information there. And for me, there's really nothing for me to draw on the 4-hour, because if I'm looking for the highest point and the lowest point, I would just come back a bit further, and that's really the high point, which is the daily resistance anyway. So I'm not going to do anything on the 4-hourly just based off that. But perhaps at another time, if I was on the 4-hourly, it might have come up and then right down and then back up, and then I would have something to draw. But I'm not going to. I'm going to jump straight down to the 1-hour time frame now. This is how you can sort of zoom out and zoom in as well. But on the 1-hour time frame here, I'm going to do the same as we did on the daily, and I'm going to draw in a zone, resistance, if you will, of the most recent high, of sort of the high point and the low point. Just going to do exactly the same. And I'm going to go with this one, although there's some more recent ones here. They're not much different to this one, so I'm going to go with the highest one. And I'll do the same down here at the lowest point. And what I will do, as you zoom lower and lower in the time frames, you won't be able to easily, or already we can't see the daily zones, high and low zones that I put in. So it's a very good idea to make sure you have a bit of a color scale so that you know the difference. So I'm just going to make, my daily one's blue. I'm going to make my 1-hour ones green. So now we can, if we're zoomed right down, on a 5-minute time frame, we can't see anything. But as the market goes up, we're going to come to this green zone here, and we can't see where it starts or comes from. but because it's green, we know that's the 1 hour time frame. That's why we have the color difference. And so for me, I mostly look at the daily, the 4 hour, the 1 hour, and the 15-minute. Now, remember on the daily, that last little leg from the high point, it had just been trending downwards. If we have a look now on the 15-minute, it's all trending up. I know this is probably obvious for a lot of you guys, but remember back to when you first started trading and you didn't even know what support was. So this is back on the daily, and on the 15, and it's trending downwards. We'll get into what trending and all that means shortly. But on the 15-minute that we were just on, it was trending upwards. That's because on the 15-minute, all we were looking at was these three green candles here, which are going upwards. So on the 15-minute here again, and it's trending upwards, and we're getting close to the 1 hour high point. So this is an area where the market may potentially turn around based off that. I know there's some people that know a lot more about trading than what we've covered already, and they understand that that's true to a certain extent, but there's a lot more to it. So, but I'm just trying to follow through on the basics. I think it's important to have an overall understanding of the very basics, like this understanding what the market's doing. Market's trending down on the daily, but just more recently it's trending upwards, although it's getting pretty close to here, which I'm just trying to explain this properly. If we go back to the 1 hour, we can see that the market's never been above that, for quite a while. Each one of these candles being an hour, it's been, quite a few days since it was higher than this. And if we go to the 4 hour, I think is what I meant to go to, we can see that the market's trending downwards. All that means is the market's going down. And it's very obvious to see here at the moment, even though it zigs up and zigs down all the way, it's overall trending down quite nicely. So if it was to follow this pattern, so it's probably going to turn around either now or sometime before this little green line, and then come down further if this trend was to continue. So that's all I wanted to go through as far as resistance and support as it is there, just so you can understand. I think the 1 hour high point and low point here, when we're looking at it on the 4 hour time frame, I think it's sort of fairly clear that you can see why the market may turn around either here or before here, simply because this is what it's doing. It's moving down at the moment, even though it's going up a bit there and down and up and down. Generally it's going down, and this was the last high point. So most likely either here or even before there, the market may start coming down again. So how I would put that into practice is that if I was down on a lower time frame and I was looking to maybe place a buy order for some reason, because remember on the 15-minute it looked like the market was going up, but because I'm getting close to the 1 hour resistance or the 1 hour high point, I might hold off on doing that because there's not much room between where I would place the trade and where the market could quite likely turn around. So it might be a better idea to wait until it does turn and then look to do a sell order, because then you've got a lot further distance before it's likely to turn around again. I know, all very basics and still not really enough to be a good trading strategy, but we're just getting through the basics here. Now, I'm probably going to call this lesson market structure, and probably trends or something like that. So I want to get into now how you can, like, it's easy to see that the market here was high and now it's lower. So obviously the market's going down, which is like trending down. But sometimes it's not as clear as this. And it's good to have some more precise indications or reasons that you would call this a downtrend. And that is simply, and this will let us do some more drawing tools and write on the chart, is that even as the market goes down, then it comes up, then it goes down and it comes up, and it goes down and it comes up. Doesn't matter. Like, the market's never just a nice, steady, straight line on an angle like that. It's always zig and zag and up and down, which is what sort of confuses it a little bit. But if we have a look here, we've got a high point and we've got a low point. And then the next high point is lower than this high point. And then the next low point, somewhere here, is lower than this low point. So that the high points are getting lower and the low points are also getting lower as you go down. And what we call that is just a higher high or a lower high and higher lows. Let me try that again. So start off, we'll call that one a high point, this one. So that's a high point. And we'll come down to here and we'll call this a low point. We'll just call that a high point and a low point. And then we're going to sort of find the next high point. I mean, you could split it up into a lot more little ones, but we'll just use the main ones to make it clearer. So this is another high point, but it's lower than this high, so we'll call it a lower high. And then we'll find what happened to it. Where did it go? Lower high. And then we'll find the next sort of low point. We'll go about here. And that's a lower low, so it's lower than this low. And the next high point's up here. And it's lower than this high point, so we'll call it a lower high again. And you get the idea by now, obviously. Lower low, lower high. All right, that's good enough. I still missed one. I keep deleting them. I'm out of practice. Okay, so we can see that the high points are going lower, and I missed that one again too. All right, so the high points are getting lower and lower. So if the trend continues, then the next high point should be lower than this one. So that's where this 1 hour high point comes into play, because if this trend is going to continue, then this market needs to turn around before here. It doesn't always, it's never exact. Sometimes it may go above it and then keep trending down. But for a specific rule for what a trend is, the highs need to go lower and lower and lower all the time, and the low points need to go lower, lower, lower as well. So that's how you can easily and more specifically define which way the trend's going. And then you can also, if you wanted to, you could draw a line from this high point and try and intersect with all the other high points. They don't always line up perfectly, but if you try and, in a perfect world, you just get the very tops of all of them and it'd be fine. We can see here, we've started here. This one's bounced right off the line. This one's gone through it a little bit. But so this, what line I've drawn here, it would be what you would call a trend line. This trend line here, because it's at the top side of the market, is also a resistance line, simply because this is where the market's been bouncing. It gets to the line and it gets pushed back down. So that's all I'm calling resistance. It may be a nice straight traditional resistance zone. It may be a trend line that the market's bouncing off and coming back down. It may be something more exciting like an order block, which we will get into later. I've actually got Des on here tonight. He's going to help me with some of these trading courses as well. And he's keen to talk about order blocks, but I told him you couldn't do it tonight. But if we have a look at this, we've identified the high points and we've drawn a line reasonably as accurately as we could so that it touched close to the tip of the high points all the way down. And if we have a look, the market's touched on this one, just hit it, and it's come back down again. This one here, it's broken through it a bit, but when it did, it got smashed back down really hard. And then here, it didn't quite make it to the trend line, and it came down again. And now we're just seeing what's happening. We don't know yet. So if we look at the trend line, remember before when we didn't have the trend line there, we were just looking at this 1 hour high point. We said that if the market may turn around either at this line or before it, now that we've got the trend line here as well, the trend line is basically telling us that the market is now ready to come back down simply because we're touching on it. But it could be like this one and it could go a little bit above it before coming down, or the downtrend may be finished and it may just smash up above here and start working on an upward trend. But for the moment, as they like to say, it's always best to trade with the trend. That can be confusing in itself because at the moment we're in a downtrend on the daily, but an uptrend on the 15 minutes. So which trend are they talking about? But you should always try to trade with the trend as best you can. That may mean you're trading against the trend on the lower time frame, so that you're following the trend on the higher time frames, depending on your strategy, and that's fine. But for the moment, we're on a pretty high time frame, and the trend's going down. And so, as at the moment, and with the only small amount of technical analysis we've done so far, I would say that the market's going to turn around here somewhere and come back down. What we will learn in future lessons is how to more specifically know that this is happening. And also then we'll start to talk about when we would enter the market and place a trade and how far we can expect the market to go before we should take the profit. And that's several lessons on itself right then and there. When to take the profit is a lesson in itself, really. All right, we got any questions on that so far, guys? If you're new and you don't know much and some of that's confusing, speak up. And likewise, if you know a fair bit about trading and you think there's something I should add to that without getting too technical at this stage, speak up about that as well.
That's all clear.
yeah, and as I said, only the basics at the moment, but understanding that when I said market structure, this is market structure. Higher highs, lower highs, lower highs, lower highs. That's the market structure, indicating that the market's moving down. There are other types of market structure as well, but at the moment, it's very easy to see that the market structure is saying that the market's going down. Now, let's just pretend like with the market and we'll see what it's doing. The market may come up a little bit like this and then come back down and then start coming up again. So if that was what would happen, there's a couple of things I'd look at here is one, it didn't form a lower high, it was just an even high basically. So it wasn't a lower high. And then the next low point wasn't a lower low, it was either just the same as this one or even a bit higher. So right about here, you're going to think there is a chance that this downtrend has stopped now because it's not forming lower highs and it's not forming lower lows. And then as soon as the market went back up above here, that's pretty much confirmation that the market has stopped trending down. Now, several things could happen from here, of course. It might then, just come right back down here and do, oops. There's my little arrow. It might look like the trend's over, but then it might smash back down and continue a downtrend. That's what happens sometimes. But if instead of that, the market just came to here and then started coming up again, now it's really full confirmation that an uptrend has started because we formed a high, a higher high, a higher high, and we've got a low and a higher low. So we've definitely got an uptrend started now. Trying to just guess that the market's, if the market went from here to here and then to here, you might go, oh, it's going up now, so I'm gonna FOMO in, fear of missing out. I'm gonna place a buy order here, and then the market comes all the way down here, and you lose your money, or you think you should have waited, and then the market continues up after you've closed the trade and taken a loss. Or if the market, if you placed a buy order here, the market might do what we said previously, and that is just come right. I don't think it'll quite do that, but come right back down again. So all I'm trying to say here is that if the market turned around here, you could possibly take a trade, counting on the market trending down. But if the market turned around here and then formed a higher high, I would then wait for this pullback and that higher low to form, and then look at doing a buy order. And then you could just maybe ride that up for quite a long ways. What you don't want to do is get to here and go, oh, the market's going up, I'm putting a buy order in. Because once it goes above here, you've sort of, you've gone above this high point here. So you've formed a new higher high. But what you should understand by looking at this market structure is that if we've already formed a higher high, there's a good chance that the market's going to pull back a bit and form a higher low before then going up and forming a new higher high and higher low and higher high. Let's get rid of all that mess. So just because it forms a higher high, the smart thing to do, the patient thing to do, is to wait for that pullback before then trading upwards. Even though I'm talking about when to place trades and sort of some ideas on when to get in and when not to get in, we really haven't covered enough to actually to do that yet. So don't go placing trades just based off what we've talked about tonight. But I was just trying to bring home the point about how we can use market structure to start to get an idea of where we want to trade. And as you can see, the market goes down, up, down, up, down, up. So we wouldn't place a trade here because we're already, if it's following this trend, like it's up, down, up, down, up, down, up, we don't put a buy order here because we've already been talking about how the next thing that's likely to occur is a down. So we would be smart to wait for that down before then trading up. And getting back to the time frame thing, let's just say we're trying to base a trade idea off just what we've looked at so far. What we'd be looking for now is some good indication that the market has reached a high point and is going to start coming down again. And the best way to get, I mean, you could just stick here on the 4 hour, but that's takes 4 hours for every candle to go through there. So the 4 hours not much good. And if we come back down to the 15-minute, what we're going to be looking for is at the moment on the 15-minute, we're getting higher highs, higher lows, higher highs, higher lows. Not really a higher high, but this is a higher high. So trending upwards. What we want to start to see here happen here is the market start to trend down. So if we were looking to place a sell order, we would want to see, because we've got our trend line here, which is where we think the market may bounce and start coming down. But at the moment, we've just got a high point here. We would like to see a lower high form and then a lower low form to give us a good indication that the market was trending down. Then we might look to jump in. And the lower the time frame you go down, the earlier of an indication you can get. Because on here, each one of these candles takes 15 minutes. So for the market to go low and then form a new lower high and down here, it's going to be several hours. So you don't want to just be staring at the screen waiting for that. But if you jump right down to the 5-minute or the 1-minute chart, oops. On the 1-minute chart, you'll get an earlier indication that the market's turned around. Although the lower the time frame you go, the less certain it is. As far on its own, a 1-minute time frame isn't very accurate. It doesn't follow its trend quite as certainly as it does on a 4 hour. But if you've got higher time frame telling you that the market's about to turn around, coming down to the 1-minute is then a good way of looking at it. So at the moment, on the 1-minute, we've reached a high point here, and then it's just sort of not doing much at all at the moment. So we would wait to see. We'd want to see it start to drop lower, and then we might form a lower high and a lower low on the 1-minute time frame, which that could all play out in less than an hour. So it wouldn't take as long to be sure. And because we're on the 1-minute, so for example, if we were looking for that market structure to change, at the moment the market structure was sort of going up, we'd be looking for a lower low, a lower high, a lower low, and then so lower low, lower high, lower low. That might be a good place for us to get into. We might be able to get into the market about there. Whereas if we were only looking at the 15-minute time frame, and we're looking for a lower low, lower high, and a lower low, we wouldn't be able to be certain that the structure had changed not even really here because we've got this low point here. So we'd be really waiting for the market to be right down here. And the distance between here and here could be a very big profit. So the earlier you can get into the market, the more accurate that entry position. There's two really good things happen if you can get a very accurate entry. And by accurate entry, I mean know that the market has turned, be certain of that, and get a trade in. Means you've got the market's going to potentially move a lot further and give you a bigger profit. And it also means where you can place your stop loss is going to be a lot closer to your entry, meaning you're going to risk a lot less to make a lot more. And risk to rewards and all of that will be at least one lesson anyway. All right, so that's pretty much all I wanted to go through tonight, guys. Got any feedback or comments or questions before we finish it off? You must have, Des. You never shut up.
I think Des had to leave.
Oh, he did he? Okay. Thought he was awful quiet.
Yep.
No worries then, guys. I'll leave that to you, and I'll upload this video and add it to the playlist with the first lesson, and then I'll post that in our little chat group.